Every time this chart makes it to this area, we see pullbacks in the markets, and that's exactly where we're sitting right now. So is it time to short? Well, let's dive into the charts. Let's look at some key levels and show you what to look for so that you can be prepared for this week's trading. What's going on, everyone? My name is Tony with Real Life Trading. I make these videos every single week to walk you through my game plan of what I am looking at doing, how I'm planning on making money this week. I hope you can use this to help out your trading, to help you be a little bit more prepared and see more consistent returns in your trading. Let's start with SPY like we always do. SPY is one of the stocks that I trade the most, the S&P 500. And currently right now, we are just chilling inside of another candle. So Friday stayed inside the range of Thursday, and now we are gapping at the moment inside the range of Friday. Now, if we start getting outside the low of Friday, we're going to be seeing some bears. So I am on edge right now for topping patterns to come through. In my opinion, this is not the strongest price action I've ever seen. We're getting that full engulfing bear candle on increased volume, and then we're getting a move higher. It did not hold that. This should have been an extremely strong bull move, gapping above this big bear engulfing candle. And instead, it closed down weak again, and now we're just chopping. It doesn't mean that it can't go higher. It's just showing signs of exhaustion. And so now if we jump out to the weekly chart, you'll see why. 1, 2, 3, 4, 5, 6 bull weeks in a row. Usually when we start getting into that 3 to 5 bull weeks in a row, we're getting ready for a retest. So now where is it going to retest to? Well, very, very strong support sitting around 565. That's also where your 10 EMA is at on a weekly. This area makes a lot of sense for the bulls to step in. So we could be getting quite a bit of volatility coming in. It makes sense. October tends to be a pretty volatile month. Going into and leading into elections tends to be a little volatile. Get a little bit of movement, and then I imagine we're getting bought up. In my book, there's an 80-90% chance that bulls are going to be stepping in here. So I'm not sure where exactly they'll step in, but most likely we hit 570 down to around 550. Somewhere in this box is where I'd be expecting bulls to come through. So that's quite a move that is open right now on these markets. And on a daily chart, we're not really getting that strong bull momentum that we would expect to be seeing if these markets are going to continue. It doesn't mean that they can't. So could we be squeezing out one more high? Well, the big target that I am looking at for this week is 590. So if you can see this level here, 590 is a large call wall, which means there's a ton of options sitting there. It makes sense for these bulls to take profits there. That's where I'm looking to exit out of my longs personally, is around 590 to 600. Most likely exit around 590 and then see if it'll get a pullback, load back in, and then take that up to around 600. That makes sense to me. But right now, we're not really getting that strength. So should you short these markets right now? Not yet. It is getting close though. I am ready to short them if these levels are broken. So let me show you what I am personally looking at to see if these bulls are still holding or if the bears are taking over control. Well, this first thing that I'm looking at is this up channel that I've had drawn now for quite a few weeks. We probably pull back into that and see some bouncing coming through. And so until we can get below probably 580 pretty soundly, getting below the 10 EMA, I would imagine these bulls are still in control and dips should get bought and we should continue higher. Now, if we zoom in to a smaller time frame, you'll notice that we are gapping below a 2-hour trend line. So that is the first sign that these bulls are losing control. We really should be holding this green line here and moving higher. Well, it looks like we're going to be gapping outside of it and most likely moving down to this daily up channel. That's kind of that 580 level that we're talking about, and then getting a move higher from there. So we want to be aware of that. I'm going to sit back and watch price action to see if these bulls can start breaking a few of these trend lines, getting below the 10 EMA on a daily chart. And then from there, yeah, I think we are going to get some selling, and it's probably going to push back into that box that we talked about here on a weekly chart. So anywhere from 570 to 550, and you're going to have to just watch price action through here to see where these bulls are stepping in to know when the bottom is in and this thing's ready to rock and roll. But timing wise, that's normally going to be just after the election. So I would say, early November is where we should expect bulls to be stepping in and pushing on through. So we could have quite a few weeks of bears happening in this market if they actually do step in and the first warning signs in these markets are showing. So inside candles, look to see if any dips get bought up and we keep on cranking. At the moment for the bulls, I would want to see strong candle closures up above 585, 586 level for me to start, gaining confidence on these bulls. Right now, this is a warning flag of time to start legging out of some longs. It's not time to short this yet, but you now have some really strong levels to use to be able to say, all right, if we break this, it's probably time to grab some short-term momentum. But you have to understand where your targets are at. Again, don't get into this trade expecting, a target of 520. The bulls are strong. It just needs a pullback on a weekly, right? The markets just play inside themselves. So on a daily chart, it looks weak. But then you look at it on a weekly chart and it's like, no, it just needs a pullback to this area before it goes higher. So all you're trying to do is make money from here down to here. That's it. So have your targets, have your entries, and understand where to get out. A big problem with people in their trading is they catch the short and they're like, oh my gosh, I'm rich. And then it reverses and they give it all up. When you should have known this is your exit area, this is your profit taking area, this is the area to start going along. You've got to understand the overall strength of the market. And overall, it's bullish, even though we're expecting bears to push back through this for probably 1 to 3 weeks. Doesn't change the fact that the overall larger time frame is bullish. It just needs a retest. So it's a great chance to make some short-term money, buy it up, and start going bullish. So I will be looking at the 1 hour time frame quite a bit for the first few days here of this week to see how we go. In my opinion, shorter term time frames, we are breaking and gapping across a trend line. If I could draw it here, we're gapping across this. That's not a great sign. Again, going to expect some selling to come through and the bulls to step around 580 and see if this will push itself up higher. So staying patient right now. It's not quite time to short this, but it's close. And again, there should be some really good money made from 580 down into 565, 570 area. Pretty easy money, in my opinion. So keep an eye out for that. For the Qs, it's very much the same story. We are still kind of stuck inside of this chopping range. We are gapping outside of the inside candle, so that's pretty weak. So bears are gaining some strength, but it's not like they've taken over yet. I would look for 487 to get taken out on the Qs for me to really think that we're going to get some sustained selling. Now let's take a look at MMFI. It is your percentage of stocks above its 50-day moving average. Now this stock is not one that I trade. It's something that I use to give me an idea of ranges and where we're at. Kind of think about it like the RSI. So you'll notice every time we get into this $70 to $80 range, it tends to be a short-term top in the markets and at least introduce the fact that some selling could be coming in. Well, that's exactly what we just played into on Friday. So this just barely got into 70 here. And that is my warning flag. That is my alarm going off to say, hey, we're up there. A lot of stocks are extended. Don't be shocked at all to start seeing some pullbacks coming across the board. And so this is one of those cues that I use to help give me an idea of like, it doesn't mean it's time to short, but it could possibly be a place to take profits, especially if we're looking at stocks at all-time highs. If you've been in on those like I am, it's time to probably start legging out of some, getting ready for some dips, and then planning your buy the dip area so that you can make a little bit more money coming through. So this is my first little warning flag in through here. The gap down right now is another warning flag. It's not quite time to short this market yet, but the cracks are starting to form and the bulls are starting to show their hand a little bit, that they're losing strength. So get yourself ready for some pullbacks. Don't be shocked at all when they come. In fact, be prepared for them. Make money on the way down. Be prepared to buy the dip. Snag it on up and see if we can't finish this year out strong. I hope these videos help you to be a little bit more prepared this week, to see a little bit more income coming in through trading, and to give you a better idea of how a professional trader navigates, plans, and executes his trades throughout the markets. First things first, you've got to be able to understand when strength is leading and when strength is gaining the markets. Right now, the bull strength, in my opinion, is starting to wane until otherwise proven. If you can't diagnose that first part, you're going to struggle in trading. You're always going to feel like you're 2 or 3 steps behind. Instead, learn how to read these charts. Learn how to get your confirmation from clues in the markets instead of movements in the markets. Everyone's waiting on a big move to tell them that the bears are here, when you can get your confirmation through clues in the price action itself. That allows you to jump in before the move, and if you're wrong, it's an easy situation to lose small on. So that way you have a win big lose small situation, and that's how you're going to make money in the markets. It's not by being correct all the time. It's about losing small when you're wrong, and it's about winning big when you're right. Have a great trading week this week, my friends. Follow your plan, be disciplined, stay patient, and you will be seeing profits rolling your way.